You know you deserve a pay raise. But when it comes time to ask for more money, your confidence drops like the price of a downtown Toronto condo, and your sweaty pit stains become visible from outer space. So you don't ask. But by chickening out, you cost yourself thousands of dollars today, and potentially tens of thousands of dollars down the line had you invested that money. So wipe your pits down, pull out a pencil, and get ready to take notes. This financial counselor is about to share his top tips to help you earn your next big raise. You're watching Inside Investing. Hello everyone, welcome to another edition of Inside Investing, the show that helps you level up your financial knowledge and sharpen your investing skills. Presented to you by TD Direct Investing, named Canada's best online brokerage by the Globe and Mail for 3 straight years and counting. I'm your host, Rob Moise. We know investing can be one of the most powerful ways to grow your wealth, but here's the thing, you need extra cash available to start investing in the first place, and young people, you just don't have enough of it a lot of the times. But the simplest way to get more of that money is to fatten your paycheck up. So we're going to hear some tips to help you earn the higher pay that you need to get your investment portfolio up a notch. Joining us is Nathan Kennedy, founder of New Money Nate. He's a personal finance content creator and certified financial counselor with over 1 million followers across his social media channels. He's also the host of his podcast, New Money with Nathan Kennedy. Nate, it's great to have you in studio here. Thanks for joining us.
So cool. It's a pleasure to be here.
You have carved out a really cool life for yourself, man. You are a full-time content creator, and I gotta say, your stuff is both entertaining and highly informative, so kudos to you. Well done.
Thank you so much.
You used to be in the corporate world,
yeah.
And you broke out on your own. It takes a lot of gumption to do that, a lot of confidence, lots
of
courage. How did you get inspired to break away from the 9-to-5 grind and go out on your own?
Yeah, you know what, I think early, firstly, again, thank you so much for having me. I think firstly, it never intended to be a career thing. When I started making content, it was a podcast. There weren't too many financial, creators or people talking about this. There was the bloggers, the fire bloggers and things like that, Mr. Money Mustache, etc. So those, I kind of, came up on that. And I figured a podcast was a growing medium. I wanted to start on that. And eventually I started to do it alongside corporate, and then influencer marketing and the creator economy, and this thing sort of like blew up, a number of years ago. And I've sort of been a little boat on a big wave, and I've been kind of just riding it. And so it's just been great to share financial literacy with other people around the world and make a career out of it. So eventually I took the plunge, and it's been about 4 years since I left, so I think I'm doing something okay. So
yeah, and you know what? You got to be good to be lucky. You know
yeah,
what I mean?
That's right.
It's hard to make it work out there, but here you are. And like I said, the content is fantastic. Now, your content is obviously all about helping people level up their careers, get savvy with their money and stuff like that. I'm curious, why you think it's such an imperative to earn your raises earlier in life, when I think the temptation for a lot of people would be like, I'm going to put off those awkward conversations for a later day, maybe when I have more experience, or whatever excuse they can kind of give themselves. Why is it so important to push for it early on?
You know what, I think we talk about it so much, compound investing, the magic of compound interest and things like that. We don't talk enough about, and what I try to talk a lot about, is how are your earnings compounding over time, right? Because you getting a 5% raise when you're 20 compounds to something significantly when you're in your 50s, 60s, et cetera. And so there's a number of different spreadsheets and graphs and things that I've run to show your career earnings over time if you ask for more money earlier on. Even if you just do one raise and never do it again for the rest of your life, it could lead to tens of thousands of dollars more in your earnings and things like that. So people talk about the opportunity cost of, what if I ask and I get shut down or I lose the offer? Well, you need to think about the opportunity cost if you don't go ahead and do that. It could compound in some way that you don't really want. So I think generally try to do it as early as you can, make it fact-based, and honestly, it pays dividends over your career.
Yeah, we got a chart up on screen here, which is really interesting. This is the extent of my PowerPoint skills, folks. But I banged out a chart here. 2 people start with $50,000 incomes at age 25. And every 3 years, one of them earns a 5% raise, and every 5 years, the other earns a 5% raise. The difference in career earnings by the time they retire, we're talking multiple hundreds of thousands of dollars. Crazy. And that's not even factoring in the investing aspect.
No.
Okay, that's just like raw salary.
Yes.
So it can be a really big deal. So with that said, let's get into some of these top tips that you have for earning your next big raise and helping you get on that path towards reaching your financial goals sooner. And for those in our audience, if you want to get in on this and you have a question for Nate, make sure that you send your questions to us. If you're watching on Webroker, you can use the questions and comments box in our broadcast platform. It's the questions and comments box there as well. And in our YouTube live stream, you can follow the link in the description, and that's going to take you over to the broadcast platform, and that's where you can ask your questions. So make sure you get those questions in. I know this is a hot topic for a lot of people, so I'm curious to see what some of the questions will be here. Now, of course, one of the biggest challenges, Nate, for young people is, let alone talking about getting a raise, is getting a job.
Yeah.
Right? And especially with all the fears around AI, it's harder than ever to break in, it seems. What do you think somebody can do to break in? Because we've seen those flow charts where you see, like, I applied to 1,000 jobs and I got like 10 interviews, and then I got ghosted by like 8 of them. It's quite the visual here. Some poor Redditor that I pulled something from theirs, and it's sad and it's tough and it can be very dispiriting.
Absolutely.
So how do they break in?
Yeah, I think right now, and it is very old-fashioned, but there is an element of who you know, and I think that's more important today. I think with applying online, the one thing you do see that constantly, where it's like, I've applied to thousands of jobs, but I think you have to break through the noise somehow, and you have to sort of get an internal champion. Like, that's really what it's going to take at this point to get through that next step. And that comes from networking. Now, everybody says, oh, networking, they roll their eyes, and they say, oh, well, that's what everybody says. But I think plugging everybody in your network, going on LinkedIn, reaching out to people, just having conversations, and not asking for a job, but just trying to talk to the people who are in the positions. Maybe they're not the CEO or the C-suite, but somebody that's in some sort of middle level, and they would be open to chatting with you so you can learn more and more. Just talk to as many people as you can. It's going to take time, but you need that internal champion to sort of skip the line to get you FaceTime. And I always say, if you can just get FaceTime, you've beaten, like you said, like thousands of people, right? So it does take a little bit of brute force reaching out to a lot of people. As long as you have a good enough sort of resume and something, I think that's what separates people who can get across. It's still going to take time. It's not like you're going to reach out to the second person, you're going to get a job. But certainly talking to as many people as you can, leveraging things like LinkedIn is still tried and true, and I swear by it. So.
Now, a lot of people would say, okay, you're doing the equivalent of cold calling people when you reach out to somebody on LinkedIn that you don't really know and stuff like that. Do you have any tips on the approach, how to get the failure rate, I guess, a little bit lower?
Sure. Yeah. I come from a sales background. I'm a very salesy guy, so I'm very numbers oriented. So I don't get too disheartened by people just not responding, people, whatever. I think you need to internally just know that most people aren't going to respond, but there are going to be some. I think trying to not necessarily be too upfront with your ask of being like, hey, I want this, I need this. Just sort of like, hey, more like an interview, more like maybe something like this. Like, hey, I'd love to learn more about your career. I'd love to learn how you got to where you are. And people honestly are pretty flattered by that, and especially if they don't get that ask all the time. Now, I don't know if all kinds of middle managers are getting all kinds of LinkedIn requests. I guess probably not. And if you just flat out say, hey, I just want to learn about how you got to where you got to. I really admire your career based on what I've seen on your profile. Like, let me know. I think at least 1 out of 10 people will at least give you a shout back. And so it is a numbers game, similar to that flow chart. But again, I really swear by that. That's how I got my job early on. That's how I've got opportunities in my career. That's how people that I talk to, whether they're applying to Big Four accounting or big banks or whatever, like it still does come down to that. People always roll their eyes when I say that, but it is what separates it right now.
Okay, so great tips on the approach there. Maybe don't ask for the world, ask for a piece of the world.
Yeah.
And maybe you can get somewhere.
That's right.
Now, let's say you end up getting a job interview. We know that the dreaded question is going to come up. What are your salary expectations?
Yeah.
And everybody, you don't want to sell yourself short, but you also don't want to sound delusional.
Right.
How do you strike that balance?
So I think I see a lot of content online saying, don't answer the question. I don't think that's great. I think you should probably have an idea in mind. The biggest thing is have a broad range of what you would think is reasonable for your position. So, I always say like an ambitious but not crazy range. And that way that can ground the conversation to be more collaborative. Like, hey, this is sort of the range I was thinking, like, what are your thoughts type thing. If you want to poke the recruiter or the hiring manager and say like, well, what did you guys have in mind? And if they answer, that's great. And then you can work with that. They probably won't. You should have a range in mind. It's unprofessional to play cat and mouse, in my opinion, because it just looks like you're not prepared. So have a nice broad range of where you would want to be comp-wise. The upper end is probably unrealistic, but the lower end is something you'd be okay with, And that is a great way to ground the conversation. It makes you look sort of more collaborative, and it prepares you because I've talked to dozens and dozens of hiring managers, recruiters, just playing cat and mouse. It's just, you want to talk about, not getting the job or not getting the next interview. Playing those kinds of games, I really don't think is helpful. They're looking for a person fast. They're looking for a person who knows what they want, right? So have that broad range, be prepared, and I honestly think you'll be okay.
I think it's a good point that you make too, but like make sure that the lower end of that range is something that you actually are comfortable with. Because if you're not, and they're like, okay, sure, well, let's go with that.
That's right. Well, they're going to go to the lower end, certainly. So you want to be okay with that. Yeah. Mm-hmm. Yeah.
Now, one of the things that Gen Z in particular has a reputation of is not necessarily preferring verbal communication, not liking the confrontation. I'm generalizing a little bit here, but that's sort of the perception. Of course, nobody likes asking for a raise. Nobody likes doing that approach either. Do you have any tips on the approach? Like, how do you pitch it to your boss when you want a raise in a way that's going to make them very, very reluctant or very difficult for them to say no to you?
I think the proverbial sort of, hey boss, I want a raise, is not a great strategy. It should be a conversation that happens months and months and months in advance. I think there's two things. So the number one thing is when you're working, you should be documenting your wins along the way. Like you should have a ledger of the outcomes that you drove, the metrics that you drove, like everything that you've done in your role should be very, very in paper, like detailed, so you can bring it to your boss for that year-end conversation or quarterly conversation, whatever it is. But I do think going to your boss early on and saying, hey, this is where I want to be comp-wise, this is where I want to be career-wise, this is what I'm working towards, like what do I need to do to get there, and let's work back from that. And so if your boss goes, okay, well, let's try to hit this or try to hit that, and a year later, or 6 months later, you've hit those targets, well, now you have a really ironclad defense as to, hey, like we did what you said, so like what's going on? And so it's not like this thing out of nowhere, it's more so just like, hey, like, how are we tracking against where I would like to be and how you set I could be based on the goals that we set. So having that early on, having that conversation, building towards that makes it more collaborative. The biggest thing with a negotiation is you want to be collaborative. You don't want to be coming at them and make somebody defensive. You want them to be it to be an open, fluid conversation, asking tons of questions during that performance. Like how are we successful? What could I be doing better? Here's what I like to be. Is that crazy? And again, having that back and forth conversation, and that's I think a much more fluid negotiation than, hey boss, I want a raise. I do this and that. Blah 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 blah. I'm underpaid. Like it's not going to go well. It should be a conversation that's happening well throughout your career, and it should be happening as frequently as you can.
Right, and here's my 50-page PowerPoint presentation manifesto of why I deserve a raise.
Yeah.
Right? Like it's tough to say.
Like your boss should already know. Like it should not even. He should already know what you're coming. It should already be established, and it's more so on them to say, hey, like maybe we can't move you there, or hey, like you did fantastic. Here's, I don't know, more money. So.
But what about a situation like this where your point about having specific metrics is well taken, but I could see some people being in a situation where the manager is kind of fuzzy or vague on what those metrics are, or maybe they seem outlandish and not really achievable. Like, what do you do? How do you respectfully push back, I guess, in a situation like that?
Yeah, I think you need to keep that in mind, because that starts to go into a question of are you at a place where you think you're growing and you're meeting where your goals are, right? So if you sat down and established with your boss that can we get to here, here's what I'd like to be, and they're like, yeah, sounds great. If you can do that, no problem. And you get there and they're like, well, no, then that's more so a question of, okay, well, how can you continue to work with them, and maybe how can we get there? But then it becomes like a leash thing where it's like, maybe it looks like you should be looking for a different employer, a different opportunity, because again, if you're just constantly running into that, if you're putting in the groundwork to work towards something and you're constantly being told no, I think that's where you're like, okay, well now you need to find a place where your goals can be met. So I think a little bit of that is going to happen for sure, where it's like, oh, did we say that? Oh yeah. You give them a little bit of grace, but I think over time you do have to keep your career goals in mind, and maybe it's not at your current employer. Maybe it's a cross-functional move to a different part. Maybe it's a big company and you could maybe get into a different management team, something like that. It doesn't necessarily need to be a different employer. But yeah, I mean, if you guys have said, hey, if I do this, I get this, and that keeps not happening, then you maybe need to look elsewhere.
Right. What about this idea of AI basically eating all our jobs? And I can see a lot of people thinking, man, I'm just thankful to have a job. Like, do I even have any leverage these days?
Right.
How do you get leverage in the AI world?
Yeah, I think, it is there. I was reading this thing in the Wall Street Journal talking about how AI first employees are very favored on teams right now. The employees that maybe aren't like tech specific, but like they're AI first, are getting tapped a lot for different projects and things like that. So being very comfortable and open to learning the technology and helping it 10x your output, maybe not 10x, or increase your output is a really good strategy, and almost like internally branding yourself as the AI person, right? How much credibility does that actually weigh? I'm not sure, but I do think if you're open to learning and using these tools to like grow your career, that is who employers are looking for in the sort of white collar space. But I hear it, right? I totally get it, right? It makes sense that there's going to be some automation that takes away some of these jobs, but just embracing it as best as you can, whether it's outside, investing in yourself, whether it's like courses or boot camps online, things that can help you, because again, it really can help your career. And I do think it's more creative than destructive to careers as well. I think I use it so much in my workflow. I think we all do in some way, shape, or form, because it's just much faster. And so just embracing that and trying to move forward with that, I think is the wave. I don't necessarily think there's going to be, 50% of jobs are all going to be gone and things like that next year. Like it's going to take time, but I think we're going to adapt with it like most technology. So.
Right. So don't go full Luddite and just like put your hand to the head and sand.
Yeah, it's inevitable. Technology is inevitable, right? And so if you're working at a white collar job that's, forward and your shareholder value, all those things, like you have to embrace it to some degree. So.
What about work from home? Because everybody got really comfy with work from home, I think to some extent. And now there's obviously the big push to return to office. A lot of people are grumbling about that. Hey, I feel like I'm less productive in the workplace. How could you use that in-office time in a productive way to kind of give you some of that leverage to ask for a raise? What are the best ways to make use of in-office?
I think if you can, and again, easier said than done, but trying to schedule your week out where you have blocks of deep work, where you just go into a breakout room and you just have 3 hours to just work, I think would make it a lot better. A lot of people, managers, things like that, just have back-to-back meetings, so I totally get that, and it's sort of laughable for some of them. But trying your best to carve out that time, maybe it's earlier in the day, can make that work in office thing a lot more effective. I do think there's been a lot of studies around career advancement of people who work remotely versus in office, and it's not really close. Like if you're in office, if you're more close with the team, if you're networking more, if you're going out after work for whatever event and you're being part of the extracurriculars, things like that, you're just naturally going to have a better time moving up through your career and on the career ladder than if you're just at home all the time. There's just only so much face time you can get through Zoom, right? And even then, it's very it is very productive for deep work, but for the social team collaborative stuff, not so much. It's quite difficult. So it is annoying, certainly to some degree, but I do think there's a lot of advantages to it, and it's trying to structure a week, and that's more a productivity question, and trying to get that deep work in where you can actually get things done, and then you can get into the sort of meetings and all of the stuff that actually needs to be in person.
Yeah, I mean, and there's something to be said too about being the glue person in your office, right? Like those people are often hard to come by, and those are the people that often tend to stick around because ultimately, especially in an era now where employers are really embracing the, together we work better aspect of things, those glue people really stand out as people that keep the culture moving forward. The other thing too, that one of the trends that we've heard is instead of asking for a raise, I'm just going to work more jobs. I'm going to be like overemployed or something like that. Yeah. What do you think about that strategy? Is that a viable strategy, or how would you go about doing that if you wanted to contemplate?
Yeah, so it's tough because a lot of employers don't love that because it lacks transparency. And if the employer is totally fine with it, then it's all good. Like, you can work multiple jobs. But from what I understand, for a lot of these roles, that's not okay. And it's sort of, there's an ethical consideration there. You do see some, tech forward people, or maybe they're software engineers or things like that, have 3 or 4 roles and they're able to manage it. My thing is, if you're good enough to manage 3 or 4 different full-time roles at once, why don't you just go work for yourself? You'd probably do a lot better that way. So I tend to be like, try to play within the lines. Overemployed is a strategy. I think I understand why people do it, and you kind of need to be remote, obviously, for that strategy. But again, in a certain climate, it's quite risky because again, the world, some of these different sectors aren't that big, and so if you get sort of thrown out, and that can get around, and there's ways that can hurt your career long term. So I'm just not sure if the juice is worth the squeeze there. But I understand why people have attempted it. It certainly was a big trend a few years ago.
Yeah. I got one more for you too. Speaking of basically getting tacitly blacklisted here, one of the things that I think people are worried about a lot too is job hopping.
Right.
This has been a strategy that, for many years has proven quite effective in getting you a higher raise or caliber of raise as you jump opportunities. However, the flip side of that is that you don't want to get the reputation of somebody who's here for a year and then they're gone. And actually recently we have this chart up on screen here too. It also shows that the benefits of job hopping, and you pointed this out in a video of yours recently too, have sort of narrowed to the point where it's not what it once was. So I'd love to get your take on job hopping. When is the right amount to job hop? When's the right moment? Because you want to skirt that line between pushing your career forward but not getting a bad reputation.
Yeah, I think in general it's always sort of been that career mobility over time has been somewhat better, and that trend has been existed. And I still think the long-term trend would still point you towards that. I think right now the labor market's so tight, and there's not many crazy layoffs. Some are starting to trickle in, but it's sort of just not many people getting fired, not many people getting hired, and so naturally that premium that you're going to get from that mobility and the lack of hiring is going to disappear. And so it is a function of sort of the market in Canada and the United States, things like that. But I think in general, moving every year, if you're going somewhere every year, because there's a statistic, I think Gen Z on average, I think is the average career span is 1.1 years or something like that, versus, and I think it was almost 3 times lower than the older generations, baby boomers, things like that. So certainly, just in general, you shouldn't be going every single year. I think a great sweet spot is anywhere from 3 to 4 years. That gives you enough time to really build a company. But the advantage of job hopping is because it's sort of it's not a blank check, but hey, there's a lot less pay equity things that the other employer needs to worry about. They can just essentially, externally get the budget to get the talent that they need. The reason why people are getting such a premium in 2021 is because companies were just saying, well, here's a boatload of money, just get us the talent because we're hiring crazy. That's not what's happening right now. So that premium is going to disappear. So I do think in general, to build your skill set and be at a career, 3 to 4 years makes a lot of sense before looking outward. If you're moving every year, you're not really building anything. You're not really building a skill set. You're not building a playbook of sorts of what you can actually do. By the time you finally get comfortable, you're leaving. And again, after that happening 3 times, recruiters will definitely start to ask questions.
Yeah, and to your point, some of these industries are kind of small, so
yes, they're very small.
Word can get around
smaller
pretty
than you
quickly.
think. Yeah.
Boy, to be a fly on the wall on a hiring manager night out where they're just sharing stories over beers and stuff like that.
Yeah.
I would love to hear that stuff.
Yeah.
In any case, I want to talk a little bit about the investing side too. You talked about benefit of compound interest with investing, with your salary as well too. These are big things. And actually, last week we heard from, last month I should say, we heard from some content creators, Steph and Den, and they were talking about just how powerful compounding can be, even with small amounts of money,
Absolutely.
as long as you're just investing it early. So we took the example of a 20-year-old starting with $100 a month of contribution, which isn't much, and how much would they end up with to get $1 million later on in their career. Let's hear about the power of compound interest.
Earlier, it means that you actually have to contribute less money to end up with the same result. And you see it exactly there. You've only put in, 45 years sounds like a long amount of time. First of all, probably goes by fast. But beyond that, you also only put in $55,000. You got, what is that, $945,000 worth of growth on top of that. That's an amazing financial return if you think of the actual numbers and amounts for yourself. If you're older and you start later on, that's fine, you can do that. You're gonna have to contribute more money to get to that same result. You're gonna have to put in $200,000, $300,000, $400,000 of your own money to get to that $1 million mark, depending on where you're starting.
And this sort of speaks to the power of just investing early, but the flip side of what Steph and Den are talking about there is that one of the things we've heard is invest in yourself, right? Get higher education, get different credentials and stuff like that, and that will pay off in the long term. So on the one hand, we could invest our money in, say, the stock market early and build wealth that way, or we can invest in ourselves. I'm curious, how do you navigate that one?
Yeah, and it's interesting because I had that sort of, I guess if you want to call it, dilemma. I do think my thing is, in general, just getting started out, graduating schools, working corporate, that's not the worst base in the world to have. And while you're doing that, starting to get into the markets and just feeling what it's like to set money aside, I think makes a lot of sense. I think what you can do is both, right? If it's perhaps you go to a company and you max out your employer match, right, where they match up to a certain percentage of your paycheck, you put that in, that's a 100% return right away, plus the compounding of that. And in the meantime, you could put a few $100s a month towards upscaling yourself, or maybe learning to code, or maybe playing around with a consultant, or whatever side hustle that couldn't flourish into a business for yourself, and investing that as well. I definitely think it's both these days. And I think it's both in the sense that even if you don't end up going into entrepreneurship, just try to play around and see if you like it. See if you can make money. See if you can enjoy it. See if you can see a path upward to you doing it full time. That's certainly what happened with me. I was investing in the markets. I was getting used to it. I obviously love it very much. But I saw this sort of media career sort of, like flourishing sort of, and it was wild. So what I did is, instead of investing into I think it was real estate. I was going to get into a down payment. I was saving up for a down payment for like a rental property or something like that. And I ended up just sort of rebranding it as my opportunity fund. And that's what allowed me to quit my job. I said, hey, well, I could just fall back on that. If things really go sideways, I'll give myself a year. If I make $0, I will be okay because I have this opportunity fund. I didn't need to touch it at all, right? Which is I was very lucky and worked very hard. But that's not going to happen for everybody. So you want to have that financial base to do something like that. So I do think it's both. I do think trying to get a little bit into the markets is just a great habit to build early on. You don't necessarily need to have millions in there in your 20s, but just getting that habit going and then having a little bit of cash towards the side, because these days you don't really need too much capital to start working on something. Like, especially with obviously AI and things like that, you can kind of get going pretty quickly. It's more your time that you're investing than it is capital. So I think putting a little bit of capital in the markets and putting a lot of time into figuring out what you want to do is probably a good balance.
Yeah, I mean, I think there's something too to be said about being intentional about where you're investing your educational efforts or your entrepreneurial efforts, because at the same time, you don't want to just be trying to grab letters at the end of your name willy-nilly.
Right.
It looks good on paper, but if it doesn't row you in a direction, it doesn't really build.
That's right. You can just aimlessly saying, oh, I just want to get all these credentials because it'll help me get a better pay raise. I'm like, well, let's think a lot more thoughtfully about that. Like, really the skill set aspect, and where's the opportunity in your career or your sector, and what leads you to be the most successful in that. And maybe that's more credentials, maybe it's not.
Mm-hmm. Now, one of the other things too is that a lot of these employers, like you mentioned, they'll have some kind of pension matching scheme or what have you that you can invest in. A lot of times, like, a young employee will get into this and they have to pick and choose, well, what investment funds do I want to hold, or how do I want to guide my asset allocation here? Do you have any sort of rules of thumb on how a young person should think about what they invest in for retirement? Of course, everybody's like risk tolerance, goals and stuff is different, but in general, do you have any sort of rules of thumb?
I'll tell you a story. I actually worked with someone, and they're not technically supposed to, talk about investing and things like that, but they say, hey, some tips that you can maybe share. I'm looking about this, and I'm like, yeah, but, sure, I can help you out where I can, and I didn't, work at the company or whatever. But he essentially was saying that he'd been putting money away for, I think, 15 years into his corporate, account, right? And I said, well, what are you investing in? And he said, I just put the money away. I didn't know I could choose. Like, no, you can actually choose. You should go and check. It turns out he had been investing, I think it was for 15 years, in a money market fund, which was basically cash. So he had missed out on a decade and a half of compounding. And I can't even put a number on the opportunity cost of something like that. And so I was like, okay, well, let's try to get that invested into something, and let's try to grow the money. So the first thing is make sure it's invested. The second thing is, whether it's with, I don't know, Manulife or Sun Life or whoever the investment provider is, they do have advisors you could talk to that could sort of speak more to the products that you could look at. Obviously, I'm a big fan of index funds and low index, broad sort of stuff. But it's certainly up to you, talking to a financial advisor as well to see what makes the most sense. But certainly, I do think you should be invested if you're going to invest in an investing account with your employer, for sure. Yeah,
I think one thing too that people often maybe discount a little bit is that this is money for your retirement. So you're not touching this thing for many, many, many years.
Right.
So you could probably take more risk than you would
That's right.
in your other funds. And maybe your TFSAs for you're saving up for a vacation or a down payment. Like that has a different risk profile than a retirement.
Right, and I hear people be concerned about volatility, and I totally understand the volatility. But to your point, it should be extremely illiquid, right? This is decades and decades and decades you're not touching this money. So I'm a big fan of being risk on when you're younger, because you have that time to ride that out, and you want to go for the capital and the growth. But you don't necessarily want to, and you're not going to be touching the money ideally, right? So trying to do that early on, I'm a big fan of, yeah.
The other thing that some of the larger employers often offer is some kind of like employee share ownership plan where you can buy shares in the company. Maybe there's a matching component to that too, which is great if you can get it. What do you think about that idea of essentially like doubling down on your employer? Because that's obviously where the bulk of your income is coming from, most likely.
Yeah.
And then to buy shares on top of that, what do you think about that?
There's a lack of diversity there, right? Because, if something goes sideways, let's say you work at, Amazon, and you're getting paid by Amazon, and something goes sideways with Amazon, well, maybe they're doing layoffs and maybe their stock's tanking, and so you're getting hit twice. So there is risk with that. There's also that becomes a little bit more speculative because now it's a single stock, right? That is more of a question of risk tolerance and what you're willing to tolerate, and that's more, an investing decision you have to make. But I don't hate it. I think if you believe in the company and you feel like you sit in a position where you're not an insider, but you kind of are, like you know where the company's going and you feel optimistic about it, then maybe that could make sense. And if you want to diversify further, then maybe just doing index funds and things like that, it works too. So it really depends. It's there are fantastic, wonderful companies that offer this that have been sideways for decades, or not growing that significantly, right? So it's not hey, this is a great company, this is a great stock. Sometimes that diverges, and so you need to be mindful of that.
Yeah, that's true. You're not always going to get like some huge pop off in like the value of your shares, right?
Yeah,
like,
we don't all work
we don't
volunteer.
Yeah.
Yeah.
Another thing too that a lot of young people grapple with is student loans. Either they have them or they're working to pay them off. What do you think about the priority of paying that down? How should they think about that? Is this something like they should try to wipe that debt out ASAP and then they can start investing? Can they do both at the same time? Where's your head at with that one?
So in Canada, the interesting thing with that is federal loans actually don't currently accrue interest. And so that changes the calculation a lot because of that. If you have a majority federal loan or a majority or all, some students have all federal, that means you're actually not getting charged interest on your loan. And so your inflation is actually starting to eat away at that loan over time. So there isn't a financial incentive for you to pay it off immediately. Now, you have to make your payments. So you can make the payments, but you can make them smaller until you can grow it over time. But there's no financial penalty to it. What you can do is if you have a majority federal loan and a small provincial portion, because the provincial portion is accruing interest, you can actually, I'm not sure why they do this, but the only way to do this is you send a physical check or a banknote or something along those lines. You can check the National Student Loan Service Center for more information on that. But you send them like a literal check to pay off that portion so that you can have a majority or all federal loan, and then now you're not accruing interest. And that really has relieved the burden on a lot of younger Canadians. And they don't really advertise it that much, but certainly that is a great way to elongate it because, like I said, $10,000 today is going to be a lot less in 10 years and 20 years and things like that.
Inflation eats away.
Inflation starts to eat away, right? So that gives you breathing room. Obviously, you have to make your payments. You work with the Student Loan Service Center to figure that out, but the financial sort of burden gets eliminated. So leveraging that sort of trick, I think it's one of my, I've talked about it before. I think not enough people know about it.
Yeah, absolutely. I certainly didn't know about it before we talked about it.
Yeah.
So I mean, like that's a really interesting little tip that I don't think a lot of people know. Appreciate you sharing so many of these career tips that you have with us. We got a lot more to get to, of course. But before we get to that and our live viewer Q&A, which is coming up real shortly, make sure you get your questions into Nate if you haven't already. I want to bring in my colleague Caitlin Cormier because she's going to show how young investors can put any raises that they might earn at work to work in their portfolio using WebBroker. So Caitlin, welcome to the show. Great to have you as always.
Absolutely. Hey, Rob.
So let's say an investor earns a raise at work. Kudos to them. Great stuff. They want to invest it. What can they do to ensure that they actually invest that money rather than sort of slowly lose it to lifestyle creep, as is the temptation if you don't do something with it?
Yeah, absolutely. It's so easy to tell yourself, I'm going to put that money away, I've got it earmarked, and then kind of, something comes up and all of a sudden the money's not in your account anymore. So one way you can do it is by automating, and you can do it directly on Webbroker. So let's hop into the platform and see where that can be done. So you're just going to click on accounts. Under transfers and withdrawals, you can click any of these three. The first one is the best, it makes it the easiest. Once you get in here, so we're doing a transfer, can either be between TD accounts. So if you have a bank account with TD already, it makes it simple, quick, and easy. Or you can do from outside of TD. So first off, you're just going to choose which account it's coming from. So if you had a bank account with TD, that would be what you'd choose here. Which account it's going to, so TFSA, RSP, whichever type of account. You're going to put in the amount. So let's just say it's $100. And then you're going to be able to tick this box that says make it a recurring transfer. So you're going to be able to say when you want it to start, and the frequency and all that sort of stuff, you'll select right here. Again, if you have an account outside of TD, if your bank account's somewhere else, you just click here from outside TD. Once you click recurring and choose your account, then it'll start to go into those different options you have, like frequency, when you want it to start, amount, and then that's where you need to put your banking information, including like a void check there. But very easy, you just have to set it up here, and then it's automatically going to happen for you without having to think about it.
Powerful things that any investor can do, really, to get their money working for them, and we all want that, of course. Now, real quickly, Caitlin, one of the most motivating things that we can see is when our portfolio grows over time, right? So how can investors get a snapshot of their investments performing over time and building that wealth over time and motivating them to keep going?
Yeah, absolutely. So within Webbroker, let's hop in right away and look at our under account details. So accounts, account details. We have a tab that is performance specifically. Within this tab, you're able to see different performance of your account. I'm just going to deselect some things here. So this will show us different time frames as far as how our account is performed. And you can even compare it. We talked about, I know we're talking a little bit about index investing. You can actually compare it against different indices like the Toronto Stock Exchange or the S&P 500 index. And you can also set your own annual target as to how much growth you'd like to see, and then see whether you're kind of matching up against that. So lots of different tools to use over different time frames to see whether you're on track for meeting your goals and kind of re-incentivize yourself to keep going.
Awesome stuff, Caitlin. Appreciate you showing us the ropes, as always. That was Caitlin Cormier. She's TD Direct Investing's Senior Client Education Instructor. All right, Nate, it's question time. We're going to open the floor. We're going to take some viewer questions. You want to know what they want to know more about?
Please.
Let's get into it. I think Eric is our first question. Let's see what Eric's got. Eric says, I'm happy as an engineer, but another firm offered me a small pay raise. My current employer's future may be uncertain. Should I switch? I like my job, but I'm worried about the future. What question should I be asking myself?
Yeah, I think here's the thing. There's costs that come with switching, right? Whether it's comfortability, it's sort of the devil you know type thing. Mm-hmm. Now, what's interesting is if you see the writing on the wall for a company and they're scaling back and it doesn't look like they're investing as much and things like that, that might make sense to just make a lateral move, not even for a pay raise, just because the sort of continuous employment thing. So I think that's probably the bigger thing than the pay raise aspect of it. Like, what's the if you've lost belief in the company, you're like, this is going sideways or like worse than sideways, I think that's a very good motivator to start looking elsewhere. And maybe it's a small pay raise right now because it's a little inopportune, but if you're really uncertain about the company's future, you probably should be you should be sort of pounding the pavement a little bit. And the small pay raise, it's not ideal, but again, it's better than not having a job in a lot of cases, right? So I certainly think you should try your best to find maybe a different opportunity that pays a bit more. But I think the biggest concern there would be the future of your current employer.
Mm-hmm. Well, certainly it sounds like Eric's a little bit in the driver's seat here because he's got another offer.
Yeah.
So he could either go to his current employer and say, hey, look, what's the deal? Maybe try to get some assurances or something like that. Who knows? But anyway, great points there. We have another question coming to us. Let's see what we got. Marcella has a question. I really dislike networking and small talk. Oh, you and me both, Marcella. Do you have any tips for making it easier or more meaningful?
Yeah, look, there are parts of your career that you're not going to love. It's kind of where I come back to. It is something that even me, sometimes I have, I think a lot of people don't love, the thought of going into a sort of hot and sweaty bar with a bunch of people. How attractive is that to any of us, right? Right? But I think there's an element of it where you're not trying to be transactional. Just try to talk to interesting people, try to have good conversations. And it doesn't need to necessarily be totally about work. You can just try to get to know them and their life and just kind of chat with them and try to make friends and maybe have it through that lens. So maybe taking it off the career lens and just trying to meet as many people in your space, and things will happen downstream of that is a good sort of mental model of it. But I also want to say, like, it's almost like Buckley sometimes. Like you just have to take it, and it's good for you, you know. So
yeah, I mean, certainly there's so many mundane, how's the weather questions
right.
that people ask and stuff like that.
Right.
But maybe it's trying to come up with interesting questions that you genuinely want to know, and turn the small talk into a little bit bigger. Yeah, totally. Good point. Okay, we have a question from Joy here. Let's see what Joy's got. Joy says, when is a good time to ask for a raise after starting a new job? Good question.
Yeah, I think. Give it some time, right? I mean, I think it is kind of a red flag for somebody to come on the scene and already be talking about getting paid more before they've done anything. You just got an offer, you just finished a negotiation, and I think you should be internally thinking about, okay, how can I get to the next step? But setting that table, I think getting your feet under you for the first few months at least, and starting to do independent work where you're off training and things like that is a good idea before you even bring something like that up. But again, after a couple of months, start to bring up that conversation with your manager, have that open conversation. And again, it shouldn't be a surprise in a year when you're saying, hey, I'm looking for 5% more or 8% more, whatever it is. It should not come as a surprise to your manager. So don't be afraid to bring that up in a couple of months when you've got your feet under you. But if second day asking for a raise is a little, a little much. So.
Well, what about in a situation where somebody feels like they've been taken for a little bit of a bait and switch? They thought they just got this new job. They thought it was to do this XYZ activities or whatever like that. And actually it turns out it's something else. In that light, is it still like something you want to hold off before you ask for a raise, or is it something you could bring up right away, you think, and say, hey, look, this isn't what I signed up for exactly. We need to kind of recalibrate things?
I think it depends. I know that's not the most fun viral answer. If it's a matter of workload, I think it's okay, try to get used to it and try to adjust. If it's a matter of this is a completely different job with a completely different skill set that I did not sign up for, that's when you would bring up that conversation of like, hey, this is what you communicated this role was. It is a completely different thing. What do we do here? Because maybe I'm not suited for it, or maybe this wasn't what I was looking for. So I think that's more so it. If it's a matter of workload, try your best to keep up with it, see if your manager can offload it and sort of ramp you up over time. But if it's a matter of it's just a completely different job, then certainly you can immediately have that conversation, because maybe it is time for you to look somewhere else, and maybe it isn't going to work out. That's unfortunate. It's not that common.
Yeah.
But if it does happen and it's like that, then certainly you'd bring that up. Yeah.
Okay, let's get to our next question. What do we have on tap here? I believe Ji-Young has a question. I'm curious about self-employment and consulting. What are your thoughts on that, and when and how to pursue it?
If you have a skill set in your career and maybe you sit in an interesting place, start to take on clients on the side. I think it's something you can manage, and it's what most consultants that go out for themselves do. Is they probably were consulting before they left their sort of stable job. So just dabble with it. Take on a few clients. Maybe if you're an engineer software engineer or web developer or something, start to build some websites and start to dabble with helping the local corner store owner, up their sort of social media or their website and things like that, and see if you like it. It's a different element. You get paid quite a bit, but there's a lot of work that goes with it and managing it as anything with business. So I'm a big fan of the career as the rock. You use that's sort of like your gasoline for you to go and find what you actually want to do and dabble and mix and match there. So you really got to dabble. Like, I'm a big dabbler, figure it out, and then when you see some opportunity there, then invest more and more and more. And then when you start to see, hey, like, I just want to be doing this the entire time, then maybe that's time to jump ship.
Now, on the consulting front, I think the immediate path, I think for a lot of people is, well, we already work with clients at my current employer. Mm-hmm. Do I try to start doing some consulting work for them on the side? Like, is that okay, or are we broaching some kind of ethical line here? We got to be careful. What do you think?
I think, I don't know. We talk about the world a small place. It's also a big place. Mixing those two things, you might want to look outward. Maybe this is the LinkedIn thing, where while you have a job, like LinkedIn isn't just great for people who need a job, it's also great for expanding your current job that you have, right? And so maybe seeing if there's other people in your network that are adjacent that you think you could add some value to, it would be a good place to start. You don't want to get into the territory of like, poaching clients or trying to get into that, because that can get quite weird. But that's, industry specific. I can't speak to it. I know there's certain clauses in certain higher level employment contracts that explicitly prohibit that. But in this case, I don't think we're talking about it. I think we're just generally like just sort of side projects. There's a lot of other people you could service for sure.
Mm-hmm. I think Neil's got a question for us. Let's take Neil's question. Neil wants to know, I found out a colleague in the same role is paid significantly more than I am. Yikes, that's tough. Can I use that in a salary negotiation?
That's extremely difficult, because if it's your manager, they can't really speak to another person's compensation generally. So they're not really in a position to, bring that and say, hey, I'm not really sure. It is more an HR question, and talking to HR about that. And if I were you, I would probably go and talk to HR and try to understand more about the sort of salary pay bands that you're within, where they're within, because they might have a lot more experience, they might have a completely different skill set, they might have entered the company at a different point in time when hiring budgets were much higher, there was a lot more latitude. There's so many different factors that go into pay equity and things like that. But going to the table, pounding it and saying, John's getting way more money than me, where's my bag? Like, I don't know how it's going to go for you. Well, it's probably not going to go well for you. So I think have the conversation with HR very professionally of, hey, I'm here. It was brought to my attention that this person's here. Could you add context as to why that is? And maybe they can. Again, they have to be kind of tight-lipped about this for confidentiality and stuff like that. But at least they could guide you towards some sort of reason as to why. But using that as leverage, that's not the greatest leverage in my opinion.
Mm-hmm. Yeah, and trying to be constructive with whatever information you can get on
exactly. Like what? Like if you came to me and I'm your manager and you say John's getting paid way more than me, like what am I supposed to say right there? Okay, so I'm so sorry, I'm going to pay. Like you have to think about their position as well, right? So again, with negotiating, you want to be collaborative, asking questions, working together, and I think that's why you go to HR. That's why you have that open conversation, and your manager can also help context. But you don't want to stir the pot or something like that. It usually doesn't end well.
Mm-hmm. Great perspective, Nate. We appreciate you fielding all those questions from our viewers and sharing all your tips here. Fantastic stuff. I'm sure you've inspired some people to, get their nose to the grindstone, figure out the way to ask for that next raise, build up that courage, and get themselves on a track where they can start accelerating their investing potential. Appreciate it. Any parting words of wisdom?
No, just thank you so much. This is quite the setup, and I'm just so happy to be here. So thank you, man.
Awesome. We'll have to have you back on soon again. It was a great conversation and so much more we could talk about in this kind of realm.
Absolutely.
For sure.
Absolutely.
And to our viewers, of course, thank you so much for joining us as always. Make sure you check out next week's episode because we have a good one for you. We're going to be diving into the psychology of money. Did you know that you could be carrying money trauma that may be sabotaging your investing behavior? Well, it turns out a lot of us are. Content creator Elise Fulmore explains what you can do about it. So make sure to tune in for that. I learned a lot about myself for this one too. So in any case, all the time we have for this episode, from everyone at Inside Investing, thanks so much for watching. We'll see you all next time.
Have more questions? Check out the links to the right and in the description below.